Hello, everyone. It's 8:04 a.m. Chicago time. We are starting 4 minutes late. My apologies. Not on time today. It's 8:04 a.m. Chicago time on what looks like another bright sunny day, blue skies. It's about time. It is. Yeah. It is Wednesday, the 26th of June, 2019. On episode 1544. Thanks for coming in today. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, there's a slight risk-on sentiment compared to where we closed yesterday on the U.S. indices. Seeing gold off $6.40. The yen is also a laggard today. The yen is off 0.47% versus yesterday's settlement in the futures. Gold off 0.45%. The British pound down 0.2%. The U.S. Treasury bond down 6 ticks. And the 10-year is down 4.5 ticks. The Bund is down 15 ticks. The Euro stock's unchanged. The leader today, again, is crude. Crude continues to truck along. Crude is up 58, is trading up 58.92, up $1.09 or 1.9%. The Nasdaq follows suit with an up day, 28 points or 0.38%. The Russell follows that. So clearly. Allocation is to risk overnight. We did put in a lower low in the ES, and that was expected, and that's where we stand coming in. The biggest events driving us today are likely to be behind us. Durable goods came out at 7:30 Central, 8:30 Eastern. Came in at negative 1.3%. Negative 1.3%, worse than expected. Consensus was negative 0.1. This is the month-on-month for May durable goods. And then on the open of the Treasury market in Europe, the German GfK consumer confidence came in at 9.8 versus 10.0, also missing. What's left for today, we have EIA gasoline and crude oil inventories. Crude oil is expected to see a draw of 2.54 million. Gasoline is supposed to see a surplus at 288,000. And then following that, really, there isn't much on deck. The ECB starts its non-monetary policy meeting today. So as far as scheduled releases, not really expecting all that much. I'd like to take some time today and do a walkthrough of yesterday, just to demonstrate the process of the auction. So I'll dive right into that. I'm not going to spend too much time on the review. Here's what we expected yesterday. What happened? Anyway, looks like my tab for yesterday's expectations is gone for some reason. That's awesome. Anyway, the primary expectation is for a push-up that ends up squeezing us lower. I was expecting us to open in a range in value. We opened just below. And overall was looking forward to push to at least 29.41 yesterday. And with the biggest target, I mentioned this, didn't draw it anywhere. I mentioned that the biggest target is 29.2275, 29.22 quarter. And the reason for that is that it's the big balance MC point of control, the composite point of control. I have to kind of walk through this commercial here to pull this video up. And that would be the FOMC, SOC, or scene of the crime, or the point in which the Fed interrupted the auction. And that's where we ended up basically closing yesterday. I believe the market was quite orderly yesterday with some really good opportunities. Here's the expectation. See, I tricked you while I was talking. I was pulling it up. And so this was the expectation yesterday, that we would likely push up into the 54 area and then squeeze down into 41, looking for selling mostly on the primary scenario. The third scenario was an open test drive up. The fourth scenario was an open test up to 54ish and drive down, which would bring us into 37. But again, yesterday was a classic trend day down. Here's what happened. I'd like to walk you through the process, the thought process. Hopefully nobody minds that, just because I got asked a lot of questions yesterday about how it is that why it is that I think the market was being orderly, and how to take advantage of the action like we had yesterday. So let's go back to yesterday's open. Let me walk this back a little bit. This is a 2-tick Renko chart. So we see that as soon as we opened, the opening print at exactly 8:30 Central was at 51, and the market was only able to test to 51 and a quarter. So it upticked 1 tick before sellers stepped in. Sellers stepped in, and we saw sellers stepped in right there. That's the open. This is the opening print. This is the opening high. And we see that sellers stepped in and drove. How do we know they drove? Is because they were beating the crap out of the bid by selling it, and so we see that in the delta. So this is the delta. This middle pane here is the delta, and the upper pane is price. Okay, ignore all the different lines and all that stuff. As we're walking through this, they come into play a little bit later, not at the open. But we see that there's an open drive. So automatically, what do we think? We think no buys, no buys. We also know that another big piece is that we took out the prior day's low. The prior day's low is this green line. We took out the prior day's low. This is the prior day right here. That's the prior day. We took out the prior day's low. So not only do we have an open drive at the open, we are out of range. We're out of range. This is what's called initiative selling. You do not want to buy initiative selling, and you don't want to sell initiative buying. Not at the open. Okay? So now the market needs to prove that it is done selling for us to go long. And it does this by simply reversing with an impulse higher. In other words, we need a drive in the opposite direction to start believing that the market is done on the sell side. We didn't see that. So what are our plays? This is an impulse down. Okay, you could see that it exceeded our impulse threshold of 7 points in this time frame. So if it's an impulse down, for those of you who watched the premiere episode that I did on this is initiative down, not responsive. Initiative down. I did the episode with on trading futures with Anthony Crudeli on the premiere. I talked about an impulse and then to start looking for the mid. There's your first setup. So we got this setup into what was a stock zone from yesterday. You see this from yesterday? There's a stock zone here at 45.75. So it did not change. The stock zones you see are for today. So we have a stock zone with a mid. So now this is our first short. The first short, what is a target? You get short. You're looking for a fixed stop. Fixed stop in this situation would be 3.5 points. And then look, what do we look for on the setup? We look for a mid pullback, and we're looking for the key risk off, completely risk off target will be the prior low at 29.40.50. So that's what we're looking for on this setup here. Impulse down, pull back to mid. The mid is this blue line. It says right there, mid. What is the mid? It is the high plus the low divided by 2 for the RTH session. And what do we do then? We expect it to extend that IB. There's there's the target. So now we're front running this by 2 ticks. Okay, target achieved. Now it's basically risk off, and we're looking for an extension down, and we get that extension down. Okay, so let's say we missed that trade. Do we buy the next big area, 29.36.37? No, we don't. We still have a market that is in an open drive down, and we avoid buying in this situation, although the 36 area has some pretty good confluence. So it retests, goes up to the opening swing low. There's the opening swing low right there. It's the first buy. The opening swing low is not set in time. It is the first buyer, the first low that was made by a buyer. It tells us where the first buyer stepped in, and we signify it with this dashed line. Pulls back to the opening swing low to VWAP, and then we get a second impulse. So now we have a new impulse to trade off of. So we're looking at this point for an opportunity to sell the mid against the impulse, and we watch and watch and watch and watch, and there's nothing to do here. You can scalp or whatever, but really what we're looking for is selling the mid again. So we're selling this area here. So we have IB, VWAP, and mid confluence in 37.38. I set this up during our convergent trade talk yesterday as we were talking about it, and I said that is the area of interest. There's a test of the mid again in a stock zone area. By the way, this stock zone was here yesterday. It had to shift down a little bit because of this consolidation, but that stock zone was up at 37. So there's actually a gray area up here. So you have confluence there. You have a confluence there. So we're looking to sell this. Boom. So we have the mid again on an impulse. Same setup as the one that came in back here. Okay. And we have the same setup basically. So what is our target? Our target is we take off a fixed amount to scale off risk. Remember that trading plan that I shared about the micros on the Futures IO video that I did with them, the webinar that I did with them. We shared a trading plan, and it recommended 3 contracts in the micros. One comes off on a fixed cost basis, on a fixed target basis to cover a third of the risk. That first scale is about 1R, a little under 1R. And then now we're looking for a new low on this mid setup. Okay. And so we move along, move along, move along, move along, move along, move along, move along. And boom, there's that low. This is the low we're talking about as the key target. So we get our risk scale up here. We got our target down here. And now you have a runner. And the next huge area down that was mentioned yesterday is what? That's right. 29.2275. That becomes your key runner target. And watch what it does here as it goes into 29.2275. It goes to 21. So it presses through and it just stops. And what do we do on top of that? We transition the point of control to 29.22. So we have an MC point of control from the 18th of June till the 25th of June. That is now the point of control for the session. When we have a point of control at the low end of the range on a trend day, what's expected next? What do we expect? We expect the market to continue lower overnight. So we expect the extended session to give us a lower low, and that's what it did. It pushed to 29.1750. 29.1750 and has rallied since on some stuff, some geopolitical nonsense, has rallied overnight, and we'll look at the overnight session. That's your review. Why am I reviewing this particular session? I'm not reviewing it because everything's set up perfectly, because let's not bullshit each other. Sorry about the language if there are kids around in a car or at home or whatever, but let's not lie to ourselves. The market is not about being perfect. The market is about finding buyers and sellers and getting them to trade as much quantity as possible, just like eBay does. That's the whole reason the market exists. It's not to screw you out of your money or whatever. It is there, and that's just part of the process. It is there to get as many buyers and sellers to trade that commodity as possible. There is no market if there are no fills, so the whole point is to establish this point of control. Remember that. And so with that, I'm pulling this up because it's easy to explain, and I can see the patterns and how it was working out as it was working out. So a really good trading day yesterday after just horrific inaction over the last few days. How do we carry this forward? So the overnight session goes sideways, but we end up resolving to the downside as expected, completely sideways, completely dead. And then the European session kicks in somewhere in here, and then we get those numbers, and we have an impulse up that is now pulling back, and the overnight session has a double distribution on pretty decent volume, 285,000 contracts. We have two distributions, and we're looking at basically 29.26 as a key area, which was just tested right there. 29.26. It's the key low volume node right there, was just tested. And if the market is not able to hold that key low volume node on the open, the expectation is it's likely to tackle yesterday's low, which was 29.20, and the overnight low. Okay, so that's where we stand on the overnight session. We have two distributions, and the action overnight is giving us an indication that it's likely to carry over. I know I'm speaking quickly, but I don't want to spend 30 minutes on this. I'm already 5 minutes over my time. Here's what's expected for today. So like every session after a trend day down, as we come in, given how we've popped. In fact, let me show you Bookmap currently as it stands. Here's how we traded through the overnight session. This is CT Bookmap. You can find it at ctbookmap.pro. Here's how it looks like for the entire session on the reopen. There's the reopen, and we end up basically just going sideways for most of the session, and then we have this buying pop, and then we have this strong impulse on pretty decent volume, pushing right through and lifting everything up this ladder from 29.27 to 29.34, and then we have the continuation move, okay, against liquidity that was present. This liquidity was there all along at 29.39. Goes up against liquidity, doesn't touch it. We don't see a collision up there. And then the market sells off on the durable goods number, and it almost comes back to where the prior resistance was, which is expected to turn into support. And this is what the liquidity looks like coming into the market for those who want to see it. This is full depth liquidity. We have a fair amount building up in the 39.40 area. We have a little bit building out at yesterday's point of control and close. The close and the point of control are on top of each other for yesterday. And those are the two kind of big areas that we need to watch for in terms of order flow. Okay, so what are we expecting for today? Today, I'm looking very simply, just following normal auction processes. I'm looking very simply for the market to be responsive back towards the point of control. If it's not able, and it's hard to say, it's a 50-50 chance here. If it's not able to get back into the 29.26 area, which outlines this support resistance and the overnight support resistance, if it's not able to break through, then we are likely getting an impulse back into this 35, 75, 37 area that we fell from, and the overnight high becomes at risk before we rest. Today is expected to be an inside day, and that's scenario 1. The problem is scenario 1 and scenario 2 are basically starting the same way, and then the expectation is whether it actually pushes up or down. Scenario 2 attempts to push back up, gets gets stuck at the key LVN right here at the 2930, and then starts to tackle the point of control, and then starts to move through to 15 quarter, which is the next big area down, and potentially 2910. So today, I can't tell if it's a trend, impulse trend down day yesterday, and then we rest today, and then we start to roll over over the next couple days to continue lower, or if today is a day where it just continues lower, and that would be scenario 2. Okay, those are the two key scenarios that we're likely to play with. Overall, I expect the market to walk itself back into that 26, and then from there, it could either rotate, break higher, like we saw on the overnight, or it's likely to fail. It pushes through the 26, retests, and then starts to tackle 22 and moves lower, moves to 15 and then potentially 10 for the target. Okay, so that's how things are shaping up. Again, it's all about waiting to see what the market does and responding to it. I know this was a long one, but it's important to see a real live example of an auction that is operating properly. Good luck today.